Welcome to my morning report. Charts prices on Thursday, 15th of June with me, Rich Pro Market Analyst at Hansen Markets. We've got a risk-off trading sentiment, I think, today. I mean, you've had this Fed meeting last night that sort of has impacted on markets. Let me just show you how markets are moving today. We've got dollar strengthening pretty much, euro, also sterling lower. Interesting that the yen isn't all that weaker, if anything really, just a few ticks. Gold is also sort of holding up after yesterday's fall away. So this is sort of coming with the Fed move last night. The Fed hiked interest rates by 25 basis points. Yes, that was expected, but also it went into a fair amount of detail in terms of how it would engage in its balance sheet reduction plans, subsequently sort of rolling up to around about sort of $50 billion per month within 12 months of it starting. But it's interesting that how the market has reacted, because if you look at the yield curves, for example, if you look at the yield curve, which sort of takes account of both, obviously, the yield curve is flattening basically, and that sort of comes with the 10-year that fell sharply yesterday on inflation disappointment and retail sales disappointment, but never really recovered. However, the 2-year did recover, and subsequently the 2-10 spread continues to sharply decline, and that reflects this flattening of the yield curve. So what we have is a case whereby the Fed is basically tightening into a market that's fearful that inflation isn't gonna pick up, and that is sort of a bear flattening aspect of the bond markets, and that is not necessarily positive for equity markets, with the equity markets falling away today, and that is it could come to a bit of an issue for the dollar moving forward as well. Yes, you have had this sort of intraday rebound yesterday on the Fed, and the dollar relatively positive today, but will it continue? I would suspect that it's unlikely still, but yeah, that's a few thoughts there on the Fed, how that's moved. Now, in terms of today, we've got the Bank of England today at 12 o'clock. Now, the Bank of England is unlikely to do anything really to rock the boat in terms of monetary policy. Certainly, we've got political uncertainty within the UK. So 25 basis points 0.25 on rates is the expectation there, and there's no real expectation of any change. Although, you do have the prospect of still Kristen Forbes dissenting, which is the expectation according to Reuters. Now, we've had the UK retail sales out just earlier, disappointing on ex-fuel. The retail sales year on year dropping to 0.6, and the monthly down 1.6. So that is not all that positive for sterling, and sterling remains under pressure. Now, this afternoon we've got the US data, which is sort of based around the Fed manufacturing datas that are coming out. New York Fed 4.0 up from -1, and then into the later in the afternoon we've got the Philly Fed, which is expected to be 24. Now let me show you the charts of those two very quickly. Philly Fed 24 down from 38, so it's still very strong for that, but the New York Fed fell to -1 last month. If that sort of stays below zero, then that could be a bit of a concern for the dollar again. We've also got the jobless claims 242 in line with basically last month, and also the industrial production 0.2% growth. Capacity utilization staying at 76.7. So a fair bit of US data this afternoon, but generally speaking, the UK is in focus this morning, having had the retail sales, and also the market will be sort of continuing to react to the Fed. Now, my chart of the day is the DAX. DAX has opened correctively today. As I said, equities under pressure from that Fed meeting, but it's back towards this uptrend, and the uptrend is a shallow uptrend, but it certainly seems to still be an opportunity to buy into weakness, with these momentum indicators still positively configured, although not exceptionally so. You'd still argue that a move back to this uptrend probably gives you another opportunity to buy. You can see that in on the hourly chart. where we've fallen late, but the last hour or so we've just started to find a little bit of basis of support that sort of comes in around that sort of level of around about sort of 12,700, which had been a breakout area, and that's basically where that uptrend comes in today. So it's interesting that the market is sort of holding on to that old sort of pivot around there, and could start to build support. These momentum indicators on the hourly chart back to 40 again on the hourly RSI. That tends to be where the buyers have re-entered, and it'll be interesting to see if the market can hold on to this move. 12,660 was an interesting support. That is the latest reaction low, so if that breaks the downside, that sort of starts to put pressure back on the downside, but the market is generally still trading within this range, and I think this range is a fairly well set range. Again, we've had a couple of intraday moves through the highs of the range, sort of that's pushing this range out further higher, and it'll be interesting to see if the market can sort of regain a little bit of initiative once this correction just starts to subside a bit. But I would still be viewing corrections as a chance to buy on the DAX. So I wish you good luck in your trading today, and I'll speak to you later.